Okay, dear students, this is Mustafa Mirchawala from Mirchawala's Hub of Accountancy, your SBR trainer. And today is the revision day for September 2023 attempt, right? And as usual, we are going to do one past paper as well. And before we move on, just for your motivation, I always share the results just for your motivation. And this is June 2023 latest results. Now listen one thing. June 2023, as you all know, according to student, was a nightmare attempt. It was difficult attempt according to students. But, and you know, when these students, when they came out of the exam center, some of them were crying. But I said, don't worry, wait for the result and see they scored these results. So when they can score such a good results in such a difficult attempt, why can't you? They studied the same lectures. They did the revision days like you. They avail the marking facility. Yes, they are. That's very important thing. If you are not availing it, then you are doing corruption, right? So it's better if you haven't availed the marking facility till now, you must avail, and it's only for registered students, right? Okay, so they read the articles. So if you follow that path, you can easily score like that. Okay, so no need to. Yes, this last month is the month of tension. Even the last days are full of tension. Yes, SBR is a difficult paper. In every attempt, 70-80% paper is new. So it's routine thing. It's routine. It's like an interview. You never know what interviewer will ask from you. Okay, so without wasting any time, I'm going to move to the past paper. And this past paper is March-June 23. March-June 23. Latest past paper, question number 4. Latest past paper, question number 4. Okay. So, and this is about one standard. This is about one major standard, that is IFRS 8. This standard is full of IFRS 8. And you know, IFRS 8 is normally one class standard, right? So if you know this is standard, then this is a piece of cake for you. One more thing is there is some aspect of IFRS 11 is also there, right? Okay, so let's start. You can see the screen. Elio company is a parent company of a group of multinational sporting clothing manufacturer. The company is preparing its group financial statement for the year ended 31st December X7. The company preparing its group a financial statement for the year ended 31st December X7. The following exhibits available on the left-hand side of the screen. See, now, obviously, this question was taken from the ACCA website, but I have converted it into PDF. So you will, in the exam, you will get in the form of exhibits, we all know, right? Okay. So exhibit number 1 is about operating segments. Second is about divisional performance, and third is about investment in GenX, which is IFRS 11 joint arrangement. Okay, so be active. Now listen carefully. Elio company's equity instruments are listed. The first thing is it's a listed company. So now recall your mind. For listed company, IFRS 8 is mandatory. Yes. For unlisted company, operating segment accounting is not must, it's your wish. Okay, it's voluntary. But for listed company, it's mandatory. Now, in the year ended 31st December X7, it operated 4 divisions: tennis gear, badminton, squash racket, and casual wear. Casual wear operates overseas and produces sports clothing, right? It sells 90% of its production to other 3 divisions of Elio company. Now wait, listen to me. If you have studied this standard, to make any segment operating segment, to call any segment operating segment, there are 3 conditions given by standards. The first condition, it must be involved in revenue earning activity and incur cost, right? So no matter you are earning external revenue, like you are selling goods to external people, or no matter you can sell it to your group members as well. So it may be internal, it may be external, no issue. So this line, like it sells, it is written, it sells 90% of its production to other divisions, so it doesn't make any difference. Still, this may be an operating segment. Okay, so it is possible that you sell goods to your group members. Badminton wear and squash racket sell the same clothing with different brand names. Okay, they are also involved in revenue earning activities, right? So Elio company has stated that making, now this is technical line, Elion company has stated, please check very carefully, that making the specific disclosures required by IFRS 8 operating segments might affect its competitive position and be misleading. Listen very carefully, this is a technical area. Therefore, the company has currently elected not to disclose any segment information. Now, wait. See, there is general rule in standards, all this standard world, that if any standard, this IFRS 8 is a disclosure standard. It's not any, this is not a disclosure of double entry or something. It's a disclosure standard. Disclosure, it is you see, if you are an investor and if you see a financial statement, you will see IFRS 8 in the disclosure accounting. Okay, so this is a general thing in standard, and standard board has given this flexibility on rare circumstances that if applying any IFRS is misleading for shareholders, it's confusing for shareholder, then you can run away from that IFRS. Then you can run away from that IFRS, right? Okay, but here they are doing game. They are saying that if we have a lot of segments and we have a lot of information, listen to me, we have a lot of information. So if we provide information in the form of segments, our shareholder will be misled and they will be confused. So the answer is, it's okay if you think that it is misleading to provide segment information, then just provide limited information. Okay, try to manage information, try to arrange information in such a way that it will be useful or understandable for shareholder. So using this line as an excuse that we don't want to apply IFRS 8, it's not acceptable. So we will be rejecting it. Okay, in the first requirement. The company chief executive, CEO, is the chief operating decision maker. Hope you remember the word CODM, chief operating decision maker. Each division has a manager who reports directly to the CEO, and their compensation is partly based upon the division's results, right? That means, see, each and every segment is checked by CODM. So this requirement is also done. Every quarter of the year, the CEO reviews the statement of profit and loss and the key performance measures such as earning before interest, EBITDA of each division. See, that means when the CEO checks the profit and loss of each division, that means separate financial information, discrete financial information is also available for each segment. See, all the conditions are met. Hope you remember, there are 3 conditions to make any segment operating segment. Number 1, that portion is involved in revenue earning activity and incur cost. Number 2, its performance is reviewed by a CODM. Number 3, it has a discrete financial information available. See, all 3 conditions are met. You can see with open eyes. You can see with your open eyes, all 3 conditions are being met. So it's very easy. The division managers meet the CEO each quarter to review the division's performance and compare the actual results to the budgeted figures. The final budgets for each division are based upon performance and are approved by CEO. Right? So this is the story. Now, this standard is same as I teach in class. Listen, we start this standard in this way. First of all, we enter the organization, and there are different business activities in the organization. So we need to find out which area is a separate operating segment, which area is operating segment. Okay. So for operating segment, there are three conditions, which I just said. Once you pick the operating segment, then the next step is which operating segments are separately reportable. And this question's second requirement is about that. So right now, my dear students, no need to get into the second requirement. Just do step by step. So we have read the first paragraph. Let's go to the requirement thing. See, this is the requirement. This is the requirement. This is the requirement. What they are saying using using exhibit number 1 only, discuss in accordance with IFRS 8 operating segments whether the 4 divisions owned by ACCA company should be classified as operating segments, right? So we need just operating segments. Okay, there is one more requirement, leave it. So they are saying are these, listen to me, does these 4 segments, the 4 segments, you read the name, does these 4 segments meet the requirement of IFRS 8 as an operating segment? Yes, they all are operating segments. Now we have to give the answer in very simple way. Obviously, first we write the law, first we write the IS, first we write the state, the rule, and then we do application. This is how we do it, right? Okay, let me give you, okay, one more thing I would like to clearly tell you, that today I have changed my strategy just for your results. I can also show you the solution of made by me, but I just want to discuss this question orally. With you guys. And then after this class, just after this class, you need to draft the answer and you need to send me on my email ID, right? So I'll mark that question. In this way, you will come to know your writing skills will be improved. Your presentation skills will be improved. Okay, right? So I'll just give you an oral or some pointers. I will just give you oral or some pointers. Listen. Listen. For our trading segments, now we are going to write the answer. Simple. Yes, I have already discussed. First, you will write for operating, to identify the operating segment in any organization. There are 3 conditions. I'm not writing it, just orally listen it. That segment is involved in revenue earning activity and it incurs cost. Number 2, its performance is reviewed by a CODM, chief operating decision maker. Number 3, it has discrete financial information available, right? These 3. As ELO is a listed company, so IFRS 8 is mandatory. IFRS 8 is mandatory for them. Yes, for unlisted company, it's optional. It's voluntary, right? Now, then the next issue which you have to discuss is about the exemption. See, this is important issue. I'm just writing the hints. Why this is important issue? In the question, listen, they were saying that we need to run away. We need to run away from this standard because providing the segment information will be misleading and confusing for shareholder. So in return, what you will say, no, you cannot apply this exemption. That is extreme. That exemption is allowed in extreme rare cases. Here, yes, you can provide segment information, but in a managed way, in an arranged way, provide information that is only useful or understandable for shareholders. You cannot get this exemption, right? Because you can plan the investment, you can plan the information accordingly. That's it, right? So no exemption allowed. Now, yes, all segments involved in revenue earning activity. We have seen, and there was one segment, casual wear. Casual wear was doing 90% internal sales, so no issue. Standard is allowed. You can do external or internal sales both. So that's not an issue, right? And now you have to apply all these 3 points. All these 4 segments involved in revenue earning activity, yes, their performance is checked by CODM, and CODM here is CEO. CODM here is CEO. CODM here is CEO. You have just read the question. And the third point is separate financial information is available. Yes, the evidence is the P&L. The CEO reviews the P&L and EBITDA of each and every segment. That means that it shows that separate financial information is available, right? So that's it. It's almost 4 marks requirement. It's almost 4 marks requirement, my dear student. You have to write this. So you need confidence. You need confidence to win this game. Now, the next thing is about now this is the same way you did. This is the same way you did in class. We have identified operating segments. Now the next thing is which segments are separately reportable. Which segments are separately reportable. So now they are giving you the revenue, internal plus external of all segments, the profits and the assets. So hope you remember, just it's very copy paste thing. Hope you remember the 10% thresholds. Hope you remember the 10% threshold, the materiality thresholds. Hope you remember the 10% threshold, the materiality thresholds, right? Okay. Listen, the 10% thresholds are the 10% thresholds are, listen, the first is the internal plus external revenue of that segment is 10% of more than the total revenue of all the segments. Okay. Number 2 is 10% profit, and the third is 10% assets. The assets of this particular segment is 10% or more than the total assets of all reportable segments, right? Okay. So you need to meet just only one. You need to meet only one criteria, not all 3. Okay. Just either you meet revenue or profit or asset, just you meet one, and that segment will become a separately reportable segment, right? Okay. So just this part, see the practical part, I'm gonna solve it. Let me shift the screen. See now, this is a part 2. This is a part 2. Listen. So you have, see, we have one column of revenue. The other column we have is profit, and the third column is assets. So can you see, my dear student, can you see the total internal plus external revenue? it's the total internal plus is 20.6 plus 10.8. 20.6 plus 10.8, which is 31.4. This is 31.4. Now the easiest method is just multiply it by 10%. 31.4 multiplied by 10% will give you 3.14. 3.14. Okay, so now let's simply compare with internal plus external revenue of that single segment with this 3.14. So now tennis gear is 16 plus nil. 16 plus nil is 16. So yes, 16 is greater than 3.14. 16 is greater. You already studied that standard, please. 16 is greater than 3.14. So tennis gear just met the revenue criteria, and one criteria is enough. One criteria is enough. Now, badminton is 1.6, which is less than 3.14. It didn't meet. And squash racket 1.8, it also didn't meet. Okay, now casual wear is 1.2 plus 10.8. Casual wear is 1.2 plus 10.8, which makes around 12. Yes, 12 is greater than 3.4. So casual wear also meet. Casual wear also meet. Casual wear also meet it. Okay, right? So we can say tennis and casual wear are separately reportable. We can say tennis gear and casual wear are separately reportable. But now look at for profit. For badminton and squash, profit and assets. See, the total profit is 6.4 multiplied by 10% is 0.64. And if you multiply 42, total assets are 42 multiplied by 10% is 4.2. Okay, this is the game. Now let's compare. The badminton profit is 0.3, which is less than 0.64, and total assets of badminton is 3, which is less than 4.2. So badminton did not meet any of the criteria. Now this is 0.5. See, this is 0.5, which is less than 0.64. So squash racket also didn't meet any criteria, and this 4 is also less than 4.2. So badminton and squash racket didn't meet any threshold. Okay, so till now, please don't sleep. Till now, only tennis gear and casual wear met the criteria. Okay, now it's my request to let's read the requirement first. So it will be easy for you to understand everything. Let's read the requirement. See, they are saying this is the requirement A part 2. Using exhibit 1 and 2, determine in accordance with IFRS 8 whether the 4 divisions of ALEO company should be identified as separately reportable segment. Now the next, see, we have already identified, yes, they are operating segments. Yes, we have done the first step. Now the next step is whether they are separately reportable segment or not. The 10% threshold thing. And now whether it is necessary or possible, very good requirement, for any division to be combined. Remember aggregation into single reportable segment of ALEO company, right? So we need to discuss about that aggregation as well, right? Okay, so according to the 10% threshold, we just saw that tennis gear and casual wear, they met the 10% threshold, right? They met the 10% threshold, almost all threshold they met. Okay, now the next step is 75. So these tennis gear and casual wear are separately reportable segment. Until now, badminton and squash wear are not. We'll discuss that these two remaining as well, don't worry. Now the next thing is there is one more test which is called 75% test based on external revenue. Look here, based on external revenue. So your external revenue is total external revenue is 20.6, and these two segments 16 and 1.2. The external revenue of these two segments is 16 and 1.2. So how we'll do it, like in the denominator we'll write 20.6, in the numerator we'll write 16 plus 1.2. 16 plus 1.2 multiplied by 100. So if you do it, it's like 17.2 divided by, it's 83.4. It's 83.4%. It's 83.4%, right? Okay. It's 83.4%. Which is greater than 75%. So we can say, yes, they met the 75% test as well. And now listen, the real application of 75% test. If the external revenue of these separately reportable segments are less than, right now it's greater than 75. If it would be less than 75%, then it is the order of IFRS 8 to go in the remaining segment and pick more separately identifiable segment, even if they are less than 10%. Now it is allowed to come to fulfill the 75% external revenue test. You can add more, of less than 10%, right? And now the last thing, which is second last thing which is allowed is the aggregation. There is one more thing which we call, we can combine the segments, right? So how to combine the segment? Listen my words. Aggregation is allowed, it's permitted but not required. This is the word of law. Aggregation is permitted but not required. It's not mandatory by standard. It's your wish. If you meet certain conditions, aggregation is allowed. Okay, so it's permitted but not required. If economic characteristic of segments are same, if you want to aggregate X and Y segment, the economic characteristic of these two segments must be same. Plus, they both meet majority aggregation criteria. Hope you remember the list which I taught in the class, like the raw material, the manufacturing process, the distribution channel, the type of customer, many things, right? So if these things are majority aggregation criteria, definitely it's a judgmental topic. It's a judgment same, then you can aggregate. So here we can aggregate, just for an idea, we can aggregate badminton and squash racket, because badminton and squash are both played with rackets, and normally they are sports things. So they share majority of the economic characteristic as same. So we can combine these two. So if we combine these two, listen. So 1.6 plus 1.8, it's going to be 3.4. Their revenue will be 3.4, and this 3.4 is greater than 3.14. Their combined revenue will become 3.4, and which is greater than 3.14. So yes, if we aggregate them, then they both combine. Then the combined effect means they meets many of the 10% threshold. So now then they will be this combination. The combination of badminton and squash racket is separately reportable through aggregation, right? So we have discussed 3 points. Listen to me, be very strong. The first thing, 10% threshold, yes, we discussed. And through 10%, we got two separately reportable segments, tennis wear and casual wear. Number two, 75% test is always based on external revenue. We have also done that. Third, aggregation thing. And now the fourth thing is voluntary thing. Listen my words. IFRS 8 says, even if a segment is less than, it's just 1%, and 10% is a big thing. If a segment is just 1%, it's a new segment. But if management believes that by reporting that segment separately is useful for shareholder, then yes, you can go ahead. Okay, so this is all what you have to write here in A part 2, right? And yeah, now you can easily send this question to me. Easily you can send this to me. No excuses, please, no excuses. Now the last exhibit, listen. On 1st of January X7, Elio company has undertaken a venture with two other venturers called, Entity Genic Company, right? So we have invested with two other partners. It's like partners, venturers partners, right? In the Genic company. Canic Company will manufacture tennis ball and badminton rackets and will supply rackets to tennis gear and badminton wear. Okay, so definitely this company is involved in revenue earning activity and cost is incurring, right? Now, each venturer owns equity with 1/3. 1/3 means 33.3%. So look at here. Look here. This is Janik company and this is Elio company, and the other two are A and B. Just imagine the names A and B. So each and every partner has 33% holding. Each and every partner has 33% holding. Now the turning points of the game, which also see voting interest, which also carries rights to the net assets, rights to the net assets, not assets, net assets. So it clearly means it's a joint venture. It's a joint venture. This is the hint of joint venture. Hope you remember IFRS 11, and you guys studied one thing is joint operation and the other thing is joint venture. One thing is joint operation and the other thing is joint venture. Listen, in joint operation you have directly involvement in the assets of the organization, right? You own the assets and you can say yes, this asset is mine, this liability is mine. But in joint venture you have like shares, so you are like a shareholder. So just think, if I am a shareholder of a company, I cannot do this. Listen, I cannot do this. I can, like, I go to the premises of that company and I say, this car belongs to me, this premises belongs to me, this chair belongs to me. No, 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 no. Shareholders only have rights in net assets, right? So in this case, my dear student, my respected, this is the case of joint venture. All key decision which affect the venture are made by a unanimous vote, joint control of the shareholder as outlined in the agreement between the venturers. Yes, 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 joint control is there, unanimous consent. However, Elio company has the options. This is a different point and this is challenging. However, Elio company has the option to purchase an additional 5% of Janik company's equity shares from each of the other two venturers at a fixed price at any time. Now, wait. Listen, this is just the legal holding. You can buy 5%, 5% from them. Like right now, E, A, and B all has 33, 33, and 33, right? So now they will sell 5 and 5 and we'll get 10 more. So it's like we'll be at 43, they will be in 28, 28. It's like just a rough estimate, okay? So although the legal percentages will change, although after the exercise of this share option, the legal percentages which will change, but be careful. Examiner has nothing written about the unanimous consent thing. No more revision in unanimous consent. So that means still there is a joint control. Still the rule is unanimous vote. So economic reality is that thing. The what we call it, corporate governance structure is same. Still the voting, we need all three votes from three venturers. So joint control is already there. Although we are just getting more legal percentages or we may get more profits, yes, but unanimous consent is same. Unanimous consent is same. Okay, so still after the exercise of this, it is still joint venture and the joint control is still there. Okay, now Janik company financial results are scrutinized quarterly by the CEO of Elio company and C. So that means Janik company, this new company's results are scrutinized, reviewed by our CEO, reviewed by operating segment condition, and the other venturers. Elio company CEO reviews the result to help make decisions about the allocation of future resources and to determine whether to continue with the venture. Now, just read this paragraph and think over it. Read this paragraph, please. Okay, so let's read the requirement. Requirement is now, see, this is the different requirement, and I have highlighted this requirement with 2 colors. Discuss how the investment in Janek company, this is the requirement, please see. Discuss how the investment in Janek company should be accounted for in the consolidated financial statement of Elio Group. This is the first requirement. This is the first requirement. Now, come to the second requirement. And discuss whether Janek company can be classified as an operating segment. Is this joint venture is our operating segment? Yes or no, we have to define. So these are the 2 separate requirements. 2 separate requirements. Yes, I have just walked through the whole question. Now I'm going to give you the answer, right? Okay, in a very simple way. Obviously, I'll give you some points and you have to send me the written solution. So listen, in this case, in this first, there are 2 requirements I've in the first requirement, where how to account for this. So it's a joint venture, but before we go to joint venture, go very slow. First of all, IFRS 11 joint arrangement says that for you must have joint control. In order to apply this standard, you must have joint control. And how joint control comes? It comes with unanimous consent. Unanimous consent is must, and it is there. Now you will define the both in little one line: JV, joint venture, and joint operation. In joint venture operation, it's a separate entity, joint venture, and we have shares of that entity, and we have rights. Venturers have rights in the net assets, but in joint operation, the venturers directly own, they have direct rights in assets. Okay, now the most important option, then we have to discuss Elio company option. We have Elio company has option to buy 5% more shares from the other 2 guys. It's okay. If we buy 5% more, we'll have 43% legal holding. But examiner is silent. Examiner has not told you anything that after this legal percentage, will there be any change in unanimous consent? No. The unanimous consent, the corporate governance structure is still same. So even after this 10%, new holding, still it's joint control is there. Joint control is there. Now, finally, we'll say that it is a joint venture for us. It is this Janek company is a joint venture for us. And for joint venture nowadays, we do equity accounting, associate equity accounting. Remember, carrying value of investment and associate, this you have to define. So this is the first part. This is the first part of B. This is the first part of B. Now come to the second part. Now come to the second part. Is this, listen to me, is this, the second part is this joint venture an operating segment? Is this joint venture is operating segment? Yes, it is an operating segment. Why? Just simple, stick to the definition of standard. For operating segment, there are 3 conditions only. I have already taught you. For operating segment, there are 3 conditions I have already told you. Number 1, it is involved in revenue earning activity. Yes, in this question we have just read that it was making rackets. This new venture was making rackets. So it and selling to badminton thing. So it is incurring cost and earning revenue. Number 2, its performance is reviewed by CODM. Yes, our CEO, read, you go and check and read. Our CEO is reviewing. Our CEO is reviewing. Our CEO is reviews. Our CEO reviews the data, right? Okay. And the third thing is it has a discrete financial information. Definitely it has discrete information. That's why we'll do equity accounting. So all 3 conditions are met. But yes, just a confusion. Confusion is we have joint control in it, not complete control. We have joint control, not complete control. So to be very frank, IFRS 8 is silent about this control thing. IFRS 8 has not discussed anything about this control or joint control. Just these 3 conditions must be met. So yes, it is met. It is met. One more point I would like to say. The RCEO, it is written RCEO reviews. RCEO reviews the data, reviews the performance, and this is the duty of CODM. This is the duty of CODM to just review the performance. Okay, it is not our duty to allocate resources. We have the power to allocate the resources and all. No, it is not written. Okay, so I've written here, it does not mean that we are responsible for resource allocation. No. We just have to review the performance. We have to check the performance, and yes, it is being checked by CODM or CEO, you can see. So all conditions of IFRS 8 is met here. IFRS 8, all conditions are met here. So it's perfect. It's perfect. It's an operating segment. Yes. Now almost all question is done. Only one general requirement is left. Only one general requirement is left. Okay, now we are moving towards the last requirement. Now we are moving towards the last requirement. You can read this C part. Okay, so C part says segmental reporting provides information about an entity operation which enables users of financial reports to assess and make informed decisions on the true position and performance of an entity with diversified segments. Explain why segmental information is important to investors. That's what they are asking. This is general requirement. This is total general requirement. Now, note, you do not need to refer any exhibit when reporting answer C. It's totally independent requirement. It's general requirement. Now wait, they are just asking you the importance of segment reporting. Now wait, this answer, anybody who has attended lecture properly, you know, when we teachers start our lectures in the class, normally we give some introduction of the topic. So normally when I teach operating segment, this discussion I do in the introduction of that, this is standard. Okay, and I'll explain you how to tackle it. Now listen, let me give you some pointers on it. Definitely the first thing is first you need to write objective of financial statement. Objective of financial statement is to provide information to users, relevant information to users. And you know what are primary users? Who are primary users according to framework? Those who provide investment to the company, like ordinary shareholders, like banks, right? So the first objective of the financial statement is to provide information to users. Now, just think, I have this much information. It is good to give all information in one go, or it is better to give information in pieces, You tell me. It is good to give complete information in one go, or to arrange information, or to manage information, or to divide information and give. Second answer is better. You just break the information and then you give it to other party, right? Okay, and now take the example. If a company has 5 products, so it's better they give product wise information, so that shareholder come to know which product is better, which is going bad, which product is more important. Like there is a product, 80% of revenue coming from one product, and that product is going bad now in the market, has great competition. So now shareholder can take decision accordingly, right? Similarly, geographical, for example, there are we have only one product, but we are dealing in 4 countries. Like we are dealing in India, we are dealing in Turkey, we are providing goods to UK, and we are providing to US. Okay, 4. Now let us say there is a war in Turkey. There is a war in Turkey, and our 60% revenue comes from Turkey. So just think, geographically we are dependent 60% on Turkey, and there is a war in Turkey. So now our profits and revenues will be disturbed. So by giving segmental information, shareholder can take correct decision, relevant decisions, right? Okay, so these all things you have to explain. These all things, this is general. Now see, I've just told you about total info and info in the form of pieces, this thing, these. Now one more thing, these segments is derived from financial statement. Like, you know, we have in the face of the financial statement, income statement, we have a total profit of 1 million, right? 1 million. But in that segment, if you go to the segment reporting side, there is a breakup, like 200,000 coming from segment A, 300 from segment B, 200 from segment C, and then 300 from segment D. So in the end, you know, shareholder wants a reconciliation, right? You have scattered the information. Now just gather it and align it, reconcile it with the main financial statement. You do this thing, just give attention, give little attention. Remember, you used to do this thing in APM. There is a topic APM, additional performance measurement. Remember? So in that, for APMs, you need to do reconciliation. Same is the case here. You have to do reconciliation, right? Okay. Now, one more thing. This is very important point. This is the basis of IFRS 8. You know, when before this IFRS 8, there was like 15-20 years back, there was one standard segmental reporting. I forgot the number. It was IS 35 or something, like IS 34 or 35, right? So at that time, it's not right now. At that time, standard used to say that make segments according to risk and return, make segment according to risk and return. But now after the introduction of IFRS 8, the new IFRS 8 says make segment according to how you run your business. Make segments according to how you run your business. What do you mean by how you run your business? It means the way you are managing, the management, internal management is managing, internal management is getting information. Just follow the same channel for financial reporting. Just follow the same channel for financial reporting. Just follow the same channel for financial reporting. Just follow the same channel for financial reporting, right? Okay. Just follow the same channel for financial reporting. So now let me give you some example. Previously and now. Just think, previously we had to make segments according to risk and return, according to risk and return, according to risk and return. Previously we had to make according to risk and return. Now listen, just think, management, let us say we have 5 products. We have 5 products, different products, and we have 4 different geographical regions. We are in 4 different geographical regions. Repeat, we have 5 products and we are working in 4 different geographical regions. We are working in 4 different geographical regions. Listen. So right now, the management is taking information product wise. The management is taking information, doing performance measurement product wise. And when the management is doing product wise, so the CEO report will be to the shareholder, will be according to internal management, right? It will be according to product wise. But go to the old standard. Let us say, according to old standard, we have to make segment according to risk and return. And that risk and return analysis says that make segment according to geographical wise. Okay. So now just think, your segments in the financial account is geographically, but the CEO report is coming according to internal management reporting, and that is according to product wise. So just see, there is no alignment. If in past there was no alignment, because in past financial reporting segments were made according to risk and return. But management channel may be different, but now after the introduction of IFRS 8, it's same. So it's cost effective, time saving. See, they are saying how you run your business. Now, whatever is the management approach, management structures are made, same copy paste, do it for financial accounting. So it's easy. And one more thing, now, after the introduction of IFRS 8, users can see the management point of view. Users can see how management sees the business, how management is looking to the business, how management is feeling for the business. So this is good for the shareholder, right? And one last thing is, sometimes segmental information gives you competitive edge over competitors. Competitive edge over competitor. There are two meanings of this line. The first meaning, there is a possibility that you are doing segmental reporting. That means you are giving breakup information, detailed information to your shareholders, but your competitor is not giving that information. So automatically investor will come towards you because you guys are more transparent. First thing. Second thing is, let us say you are doing segmental reporting breakup wise, and your competitor is also doing segmental wise reporting. But now, through segmental wise reporting, each and every segment will be highlighted. So your segment will be easily comparable with your competitor. And there is a possibility, if your segment is good, it will be highlighted. So you will be in the eyes of shareholders, right? Okay. So you have to write all these points. So it's not difficult. Even when I or any teacher teaches this standard, they normally discuss these points. So this question was totally from your past papers, from your register, from your book. So it was scoring question. I would request all of you to solve it now on the platform and send me this question. I'll mark it for you. Okay. So take care and bye-bye.